Bitcoin does Bitcoin things. I try not to judge. I think we're going to see new highs in 12 months, within 12 months. I could be wrong, but that's my base case. Something like 150,000 wouldn't surprise me. But I try not to give specific price targets because you can have a liquid moves that bring you up way higher, or you could fail to reach those moves. But I'd say 12 months is bullish, is my view. After World War II, we were in a very single pole world. The U.S. dominated by many fronts. We were like over 40% of GDP, by far the biggest military, biggest industrial base. And then for decades, the only partial rival was the Soviet Union, but the size was always in the U.S. favor. And then particularly once the Soviet Union fell, 3.5 decades ago, we were in a true single polar world for like the 90s and the early 2000s, whereas the U.S. was kind of by the center of everything. Whereas now we've seen the resurgence of China, resurgence of India, and other places, which is actually more of a natural state of affairs. I mean, the U.S. population is like 4% of global population. Before the 1800s, like opium wars and things like that, China was a really big share of global GDP just because of the population and other things going for them. Same thing for India, used to be a really big share of global GDP. So we were in this kind of period of time from like the early 1800s to like pretty recently, where the U.S. and more broadly the West was the center of everything. And now we're kind of going back to the state that existed prior, which is that there are multiple poles in the world. There's less of a clear center in the world. And I think that over time, currencies and trading systems will increasingly reflect that. I think that it takes time to catch up to that reality because currencies have network effects. So it happens with a lag, but it does happen over years and decades. I think it's a structural trend change. I think the 40-year bond market bull market ended. So from the early 80s all the way up into the early 2020s, we were in a period of structurally declining interest rates in the U.S. and many other parts of the world. And with structurally falling interest rates means structurally higher bond prices. We bounced off zero and are now kind of trending sideways. And I think that's a persistent change. There's less of a bull market that can happen if you drop from 4% to zero than from 20% to zero. So even the bullish scenarios are not that bullish anymore. And then some of the bearish scenarios, especially including like just inflation and debasement, are pretty negative. A comparable period is to look at from the 40s through the 70s was a terrible multi-year decade for sovereign bonds. Interest rates were rising. The 40s and the 70s are both inflationary. Even the 50s and 60s that were not really inflationary, it was better to own most other assets than bonds. Nominal GDP in the U.S. was growing faster than interest rates. It was just better to own equities and other things. And so I think we're kind of in that kind of same period where like for decades, bonds are just not going to be one of the best investments you could have, which was not the case in like the 80s and 90s. On a risk-adjusted basis, they were amazing. High yields, nominally risk-free, did well in a recession. That was a great asset. And I think we're past that period. And then in addition, when you look at geopolitical stuff, I mean, from the 70s until literally 2009, among central banks, there was decreasing tonnage of gold. They just, dropped their tonnage from their peak down to like 30,000 tons. And then since 2009, that's been building back up. That was the turning point. That's why I describe this period as kind of an acceleration. It's not the initial change of all trends, because some of that happened back in the global financial crisis in the early 2010s. So that's where some of the changes started. But this accelerates that in many cases. So I think that we are seeing a return toward neutral reserve assets as a significant holding of central bank assets. So basically, in a world where the biggest bond markets are prone to persistent debasement with lower interest rates, and in a world where they can be confiscated, gold in the central bank's own self-custody is attractive as a sovereign asset. Around the margins, Bitcoin's interesting. It's only a $2 trillion asset, so it's like a tenth of the size of the gold market. It's more volatile. It's only 16 years old, but among some smaller countries, Bhutan, El Salvador, it's interesting to them. It's also a trading mechanism for countries that are sanctioned. It's an open source settlement mechanism that they can turn to, and so I do think we're seeing a upshift in the appreciation of neutral reserve assets, which, going back to that Stephen Myron paper, he called that out. He said basically, as if we make the treasury less attractive as a reserve holding to make the dollar less overvalued, then this this could benefit some other currencies, but it'll probably primarily benefit neutral reserve assets. And he mentions gold and cryptocurrencies, with Bitcoin being the by far the dominant one. And so I think that's the world we're going in, a more multipolar world that is then tied together with some of these neutral reserve assets.
If we look at Bitcoin's performance in the last months and also considering the whole turmoil, you could say that for a risk asset, it did pretty well, right? And it also recovered. Now it's above 100K again. Are you surprised?
So I'm not surprised. I do think that the market is seeing that more. So for much of say 2020 through 2024, the biggest driver was liquidity, just because there's so much macro stuff happening. It was either flooding into the market like 2020, 2021, or being rapidly pulled out of the market like 2022, and then gradually put back into the market like 2023, 2024. And that would make the Bitcoin and the NASDAQ basically go up and down together, just at different magnitudes. But then there are some things that can negatively hurt one and not the other. And so, for example, if you go after corporate margins, that's worse for the NASDAQ, whereas Bitcoin has no margins. It's money. In addition, it's a global asset. So in order to buy NASDAQ stocks, you got to buy dollars and then buy the NASDAQ. Whereas Bitcoin, even though dollar is the biggest trading pair, I mean, it's a global asset like gold. There's exchanges around the world that you can buy it at. It's not explicitly tied to the dollar. And so we saw, for example, during the initial volleys of the trade war, there were capital outflows. So stocks went down, bonds went down, the dollar went down together, as something you often see in emerging markets when there's just kind of global capital coming out of that market. So we had a little bit around the margin just kind of pulling out. And Bitcoin's a global asset. So much like gold, it kind of held up well in that environment. Another way to describe it is that when liquidity conditions are decent, as they have been, and yet there's other reasons to be bearish. It could be stagflation. It could be trade tariffs on corporate margins. Then that's good for Bitcoin, which benefits from that liquidity, but it's negative for certain stocks. And I think that's what we've seen. So there are types of things that can decouple Bitcoin from the NASDAQ or from the S&P. And this type of period is one of those. And so I think that's the case. When you're bullish on liquidity, but you're not super bullish on margins, then Bitcoin is often a better play. And there's also this idiosyncratic things with the market. So there are times where Bitcoin's overbought and it needs time to cool off for a period of time. And we kind of went through that. So it got overbought in March 2024 after the ETF announcements and launch. People were really bulled up and it kind of got frothy. There are multiple metrics I look at that kind of quantify this. And then it went through a 7-month consolidation. And then, when the election happened, it's more pro-Bitcoin, pro-crypto administration. We got another kind of a catalyst to be bullish again, but also we had worked off all of that valuation excess since March. We popped up to something like 108, 109K. We got to similar levels of quantitative frothiness. And so we consolidated, going into April. And a lot of that's worked off now. So it's just part of this its own kind of market going through periods of overbought, periods of being forgot again. And I think most metrics look at a pretty good place for Bitcoin. I'm pretty constructive with a 12-month view. Bitcoin does Bitcoin things. I try not to judge. I think we're going to see new highs in 12 months, within 12 months. I could be wrong, but that's my base case. Something like 150,000 wouldn't surprise me. But I try not to give specific price targets because you can have a liquid moves that bring you up way higher, or you could fail to reach those moves. But I say 12 months is bullish, is my view.
This M2 correlation chart with Bitcoin, what do you think of it?
So I think there's something to it, but I think you can't over rely on it. So we actually did a study. I partnered with Sam Callahan to have a study happen, and it did show that Bitcoin in say 6 and 12-month periods is more correlated with global M2 than other large assets. So it's more positively correlated with it than gold. It's more positively correlated than S&P 500. More positively correlated than bonds and foreign stocks. So about 87% of the time, Bitcoin price will move in the direction of global liquidity within, say, a 6 to 12-month period. And that does not mean that on a week-by-week basis, it'll track it. Sometimes it will, sometimes it won't. And it's not the only variable. So, if Bitcoin gets tremendously overbought, as it has in some prior periods, then even if global M2 keeps inching up, there's a good chance that Bitcoin can correct. So we actually analyzed those 17% of periods where Bitcoin did not correlate with global M2, like it moved in the other direction, and those were often periods where Bitcoin started that period dramatically overbought. And so basically, regardless of ongoing good news for Bitcoin, it would fall back down because it was starting from an unsustainable position. So I'd say when you look at I would say global M2 and overall liquidity is a really powerful variable to be aware of when trying to estimate Bitcoin price action, but it's one of a handful that you should look at rather than just the only thing and just overlay two charts and call it a thesis.
Welcome back, everyone, to the Market Chronicles.
Great to be here.
We are absolutely firing on all cylinders for episode 26. Another deep dive into the forces really shaping the financial world around us.
That's right.
And hey, if you happen to be joining us over on YouTube, definitely hit that subscribe button. You won't want to miss our analysis.
Absolutely. More insights coming your way.
So today we're digging into some really interesting recent commentary from Lyn Alden. We're going to pull out the most crucial insights, really, from her analysis on Bitcoin, these big global economic shifts, and the role of reserve assets.
It's quite interconnected, isn't it?
It really is. Our mission, basically, is to give you the distilled essence of her expert take on all this. A clear overview, all under 10 minutes.
Okay, let's dive in. Bitcoin first.
Yeah, let's start there. What's Alden's view?
Well, she's got a notably optimistic outlook for the next 12 months or so. Looking for new highs.
New highs. Okay. Any specific numbers mentioned?
She did float the potential for like $150,000 level.
Yeah.
But, she also stresses how tough price targets are. Volatile market.
Sure. Always difficult with Bitcoin.
Right. Her point is more that Bitcoin does Bitcoin things. It has its own unique dynamics, separate from a lot of traditional assets.
That makes sense. Okay, so beyond Bitcoin, she talks about a bigger picture shift, right? This move away from a unipolar world.
Exactly. She lays out how, post-World War II, the U.S. was incredibly dominant. Over 40% of global GDP, military strength, industrial power.
A clear sender, basically.
For decades, yeah. Even with the Soviet Union as a partial rival, and then especially after the USSR fell in the 90s, that was peak unipolarity, maybe early 2000s.
But that's changing now.
It is. And she argues this dominance was, historically speaking, a bit unusual. Before the 1800s, power was more spread out. Think China, India.
Right, larger shares of the global economy back then.
Precisely. So what we're seeing now with the resurgence of China, India, other regions, it's sort of a return to a more multipolar world. No single clear center.
And that has implications for, currencies, trading systems.
Over time, yeah. Network effects take a while, but you'd expect those systems to eventually reflect this more distributed power structure.
Okay, so shifting world order. How does this connect to something like, say, the bond market? Alden had thoughts there too, didn't she?
She did. She argues that the huge, 40-year bond bull market is essentially over.
The one driven by falling interest rates since the early 80s.
That's the one. Rates fell and fell, pushing bond prices up right up until the early 2020s. Now we've bounced off zero and things are more sideways. It feels like a persistent change.
So the easy gains are gone.
That seems to be the key insight. The upside for bonds, even if rates dip again, just isn't what it was. And if inflation sticks around, that's a real headwind. She draws a comparison to the 1940s through the 1970s. That was a really tough stretch for sovereign bonds, rising rates, inflation.
Or just other assets doing much better in the 50s and 60s.
Right. So the takeaway is bonds are unlikely to be a top-performing asset class for maybe decades to come.
Okay, so if bonds are less attractive, what about reserve assets? Central banks must be thinking about this.
Definitely. And Alden highlights this fascinating trend. Central banks were actually decreasing their gold holdings from the 70s until about 2009.
Right, selling it off for a long time.
Yeah, but since 2009, that was the turning point. Around the financial crisis, they've been significant net buyers. Accumulating gold again?
An acceleration of that trend, really.
It is, and it points to this move towards neutral reserve assets becoming a bigger part of their holdings.
Why the shift?
Well, a couple of reasons. Concerns about potential debasement of major currencies, fiat currencies, and also maybe the attractiveness or lack thereof of holding huge amounts in major bond markets, maybe even confiscation risk down the line.
So gold, especially gold held in self-custody, looks pretty good from a sovereign perspective.
Exactly. It's a neutral sovereign asset. And interestingly, this is where Bitcoin comes back in, slightly.
Yes.
Alden sees Bitcoin as this sort of interesting development on the margins for neutral reserve assets. It's much smaller than gold, way more volatile, obviously.
Sure.
But you see smaller countries like Bhutan or El Salvador experimenting with it. And potentially its use as a trading mechanism for nations facing sanctions.
Interesting angle.
Yeah, she even referenced a paper by Stephen Meyer suggesting treasuries are becoming less attractive, which could benefit neutral assets like gold and, yes, maybe crypto, especially Bitcoin.
So it all ties back to this idea of a more multipolar world linked by these neutral assets.
That seems to be the vision, yeah.
And speaking of Bitcoin, she commented on its recent resilience, didn't she? It held up pretty well during some turmoil.
She did. And she said she wasn't really surprised by that performance.
Why not? What's the thinking there?
Well, her view is that the market is maybe starting to recognize Bitcoin's unique properties more. From, say, 2020 to early 2024, its price was really heavily tied to just overall liquidity, right?
Liquidity driven.
But now other factors are starting to play a bigger role. Things that allow it to potentially decouple from assets like, say, the NASDAQ.
Like what factors?
Well, Bitcoin doesn't have corporate margins to worry about. It's a global asset, not explicitly tied to the dollar in the same way equities might be.
Okay.
Think about the trade war example she used. Stocks, bonds, the dollar all fell together, but Bitcoin actually held up.
Right.
So Bitcoin can actually benefit in scenarios where liquidity is decent, but there are bearish factors specifically for stocks. Maybe stagflation, margin pressures, things like that.
And it has its own market dynamics, too.
Totally. Idiosyncratic moves, periods where it gets way overbought, like maybe after the ETF launch back in March 24, then it needs to consolidate. Then maybe a catalyst later, like post-election, pushes it again.
So the current outlook is positive because some of that froth has worked off.
That seems to be her take, yeah. Valuation excesses worked off, setting up for potentially the next move.
Okay, one last point. The correlation with global M2, the money supply. How does Alden see that relationship?
She acknowledges there's definitely a correlation there, but she adds a note of caution. Don't over-rely on it.
Okay.
Research she partnered on showed Bitcoin has a pretty strong positive correlation over like 6 and 12-month periods. Stronger than gold, S&P 500, bonds.
So it generally moves with global liquidity.
Over those time frames, yes. But 87% of the time, the price moved in the direction of global liquidity.
That's pretty high.
It is high, but it's not a week-by-week guarantee, you know? And it's not the only factor driving price.
Right. What about the 13% where it didn't hold?
Often, those were periods where Bitcoin started out significantly overbought. So even if liquidity news was positive, Bitcoin corrected anyway because it had just run up too far too fast.
Makes sense. Valuation matters too.
Exactly. So, long story short, global M2 is a powerful indicator, a tailwind or headwind, but you need to look at it alongside other variables, not just in isolation.
Got it. So a really comprehensive view from Lyn Alden. We've touched on the bullish Bitcoin outlook, that big shift to a multipolar world.
It's into the long bond bull market, the rise of neutral reserve assets like gold, and potentially Bitcoin on the margins.
Bitcoin's potential to decouple from other risk assets, and that nuanced link to global liquidity. Lots to unpack there in under 10 minutes.
It's a lot going on.
Definitely. So maybe the final thought for you, the listener, is to consider how this interplay, these big macro shifts and the evolving role of digital assets, how might that shape your own understanding of where finance and global markets are headed?
Yeah, it's a landscape that's certainly changing fast, worth keeping a close eye on.